welcome everybody to this panel about for what is crypto good. So the idea of this panel is basically to explore a little bit what are real use cases of crypto, for what can it be used, so whether it's in the financial system but also outside. And I'm very happy to moderate this panel and have this very knowledgeable panelists coming from different angles. And I think we first start with a short introduction. Maybe, I don't know, Marta, you want to start?
Sure. Hi, I'm Marta Belcher. I'm the president and chair of the Filecoin Foundation.
Hello, everyone. Pat Thelen. I am with Ripple. I head up our global partnerships and business development teams.
Hi, Andrea Perlak, and I go by Andy because everybody forgets Andrea. I am CEO and founder of Crypto Accounting Group, and I run a few VCs that are crypto native.
Okay, great. So thanks, everyone. I, by myself, I'm a lawyer at the Swiss law firm MME Legal. So yeah, let's dive into the topic. So crypto has become, or has a lot of global attention now. As we've seen, it's everywhere in the news. I mean, Bitcoin went up to 100K. And we have also seen other coins rising, and people everywhere talk about crypto, even people that have nothing to do with crypto. But of course, currently it's still a lot of volatility and speculation. I mean, we have seen the last couple of days or 2 days what happens even with a future president's coin and his wife's coin. The question is whether this is really adoption of crypto. I mean, I'm very critical on that. But of course, I'm interested in what the panelists think about. Marta, you want to start?
Well, I think there's definitely a lot of volatility in this space, and of course, there's a lot of speculation. That doesn't mean that there isn't a lot else going on underneath the surface. And I think there's a lot of really exciting use cases that are actually real. That many members of GBBC, including Filecoin, are doing a great job talking about. So I'm really excited to be here to talk about what crypto is good for beyond the speculation, which certainly also exists.
Pat, what are your thoughts on that?
Yeah. I've been at Ripple now 6 years, and so this question used to come up all the time. Is there a real use case? And that was back before blockchain was actually mainstream, for sure. It's here to stay. Like that genie's out of the bottle. But I think if you look back on technologies like the internet, back in the day, it was retail and consumers drove the original kind of use cases of that. We downloaded, for those that might have been around, we downloaded music on your MP3 player. It's really cool. I don't think they probably thought that was going to be where 20% of e-commerce, would be done now online. So point is, the technology is there, it's being embraced, it is volatile, there is a lot of speculation, but in the here and now, there are many really great use cases that I think we're going to talk about today. So I think the speculation was there, that's good, and now it's on to utility.
Did you see Pat look at me when he said that there's people old enough? I'm just teasing. I am old enough for that. Of course, we have so much speculation in the sector, right? But that is what happens with the new market, and I am completely comfortable with it. I think most of us who are crypto native are absolutely comfortable with it. To me, honestly, the most exciting use cases have nothing to do with financial sector. It is amazing what is happening. We are making huge strides. Just even look at the last two panels, all of the climate change benefits, the privacy related protections that people are enjoying across the globe. That is the exciting stuff to me. So yes, we've seen what happens in the financial sector. We've done derivatives before. We know how to lend money to people. But what's new and it's exciting is actually outside the financial sector from my perspective.
Do you agree, Pat?
Well, we deal exclusively with financial services, and so I think there are exciting use cases. But if you look at so in 2016, Ripple, which has been in business for 12 years, said we were going to pick on one pain point, and that was cross-border payments. I'm a legacy banker. I've been doing this for 3 decades, and that is a pain point with a ton of friction. And it's hard to build a payment network. So after years of doing it, and it really kind of went into several different iterations because the world wasn't ready for crypto, So you build a better mousetrap, the technology works, you get some of the core components like liquidity, on and off ramps, things that are very difficult, and then you're actually able to embrace the technology. And in financial services, you're dealing with batch systems, you're dealing with systems that were created way before the internet, about the time before we were born, and so it's just not fit for purpose. And so if you look at that and you think through right now, and I know we'll talk about this as well, it's not about the technology, it's about how it fits within the framework and the construct. So what started as cross-border payment has taken off and exploded, and we'll get into all kinds of different use cases in and around traditional finance, getting into decentralized finance.
But, I mean, my question is a bit, of course, we see that there are solutions on Web3 base for cross-border payments, and they also seem to work, but what does it need actually that everyone is just walking around also here on the street and is saying, I mean, for me, it's like native using blockchain. And I'm still struggling a bit with that, because as long as there are old-fashioned payment solutions where I don't know what's happening in the background, but at least I can pay immediately in a store, why should I use blockchain?
3 reasons, and I think that's what the technology brings in. As you put compliance into it, blockchain allows for speed, and we are in a 24/7 world that is built on the internet. It allows transparency, and if you're in traditional banking, there is a lot of walled gardens, and there's a lot of friction around that. And then the third thing is you have the ability to have inclusion and access in a way that if you've ever been de-risked by a bank, it's crushing. Or if you don't have financial inclusion, it can be, again, crushing. So I think those are the 3 things the technology provides. Easy to say, hard to do, because in each jurisdiction you have to have the compliance, the regulations, and the right kind of construct where each one of those regulatory bodies embraces it. We've struggled with that in some places, including the U.S. As of today, we'll probably see some change in that. We'll leave that for 2025, but I think the time is now, and we have a product. Our payments product has moved about $70 billion now within the last 5 years, about 35 million transactions. So again, when I used to sit up here, we were speculating. This is real.
Mm-hmm. Marta, what are your thoughts on that? I mean, you on Filecoin, you decided to go with your own utility token, which is basically creating a full ecosystem. So you could also make the claim that no other payment systems are needed anymore.
Yeah, so I would say 2 things to add to that, and I agree with all of the points you made. 2 things I would add. The first is, I think, sitting in Switzerland or the United States, I think it's really easy to take for granted that, our sort of financial institutions and government-backed currency is, pretty stable. And when you talk to someone who's from an area of the world where they've experienced hyperinflation or a lot of government instability, it's much easier to explain to them why you would want cryptocurrency. There was someone who I was talking to once who was telling a story about literally running through the grocery store because by the time you got to the front, the prices would be different if you were like 10 minutes later. And so someone like that, they just get it immediately. Of course, they want to have a currency that is not tied to an unstable government, right? So I'd say that's one thing to add to that. The second and more important thing to add to that is what cryptocurrency allows you to do, and this is the point about Filecoin, is it allows you to program your money. So it allows you to write computer programs where you can automatically transfer extremely small amounts of money across the globe instantly and automatically in a way that you just can't do with traditional financial rails, where you're talking about using, like, on the back end, what's actually happening is like 1960s automated clearinghouse technology, right? So being able to actually write computer programs for your money opens up this huge amount of really great use cases, and later in the panel I can talk about how Filecoin uses that programmability. But you can even imagine something like, okay, for every second of a song that I play on my computer, automatically transfer 1/1,000,000th of a cent to the songwriter, and automatically transfer 1/1,000,000th of a cent to the singer. winger, and that can happen instantly and automatically across the globe, just as easily as, attaching a file to an email, right? Being able to send information across the globe, now you can send value across the globe instantly and automatically. So I would say those are two things I would add to your list of 3. So we now have 5 things of reasons that you would want to use cryptocurrency, and I'm happy to talk later about how Filecoin uses that programmability.
And if I may add something, I ran the derivative and bond portfolio at the World Bank during the financial crisis. And I can attest to the fact that the system that we still have in place has so many intermediaries and is so complicated that it's extraordinarily difficult to get right. If we use blockchain correctly, it's a monumental leap forward for our society, not only in terms of cost, transparency. There's a myriad of reasons that we actually do need blockchain tech for payment processing and other financial services.
I mean, I agree. The disintermediation is, I think, something which is key for the whole financial market, and we have seen that if there is too much trust in intermediaries, this can be a risk. But on the other hand, I mean, if we're looking at developments in the market, we also see like stablecoins. I mean, Ripple also has a stablecoin, but still there it's pegged to national currency. And my question is a bit, does that make sense, or is it not possible to create in any other way stability? Because I don't know exactly how your coin is working, but in most cases the US dollars are with an intermediary again, and there can also be a risk if the intermediary goes bankrupt.
Yeah, I think the number one thing you have to have is trust. I mean, that's financial services is around trust. And so, we've just launched our stablecoin, and we did it right for really a few reasons. One, we wanted to make sure it was compliant. In other words, once you have access to the coin, there's no reason why it might not be good at some point. The second, of course, is the ability to actually understand what assets, high quality liquid assets are behind it. And those are the things where if you have the ability to go out and do attestations on a monthly basis, it's there, you can see it. And so those are kind of given. You have to have those. But I think it's also, the ability to have, and you kind of brought a few of these up. If you're in a country like Latin America, Argentina, or if you're in Zimbabwe or Nigeria, like you've got hyperinflation, it's wealth preservation. And so if you don't have access to a bank account, you have the ability to grab it, it's on chain, and you can keep that. As long as at some point you can off-ramp that and buy foods or goods and services, then it is a stable. Today, US dollar is still the trade currency, and it's flight to kind of safety there. So that's the approach. I think if you have both the trust and you have the access and the ability to leverage and use it, it ends up serving the need. And I think, by the way, you can talk about those unserved. If you go up market a little bit, that same thing translates into small, medium-sized enterprises across the globe. Suddenly, businesses also have access to do, in the last panel they were talking about supply chain, trade finance. It's easy if you're a large institution. It's hard if you're not. And if you get access to these stable coins, crypto is very fast, it's very efficient, it's very transparent, but it's volatile. And so how do you have an easy mechanism to transition that into a stable coin? That is what's playing out. And it's kind of the proof is in the pudding. There's $200 billion of market cap around, this stable coin asset. And all indications say that's going to be, tenfold over the next kind of 3 years. So. There you go.
But I mean, today a lot of stablecoins. Especially, of course, USDT is one of the most well-known, and people always say they are the successful one because they're not used by retail. They are used by asset managers and other institutions that are shifting funds around with exchanges. And Marta, I would be interested in. With Filecoin, basically, you mentioned before you have programmable money, so you're not using a stablecoin and people use your token to interact with the network, which is kind of the utility. And I'm interested in to understand the decision to do that, and whether you think also a stablecoin in the future could make sense for Filecoin.
Yeah, absolutely. So to simplify a little bit, the way that Filecoin works is, I talked about the programming your money, and with Filecoin, we are allowing people to effectively rent out the extra computer hardware space that they have on their hardware, and allow other people to store their files, sort of chopped up and encrypted, on other people's computer hardware. So you can think of it like Airbnb for file storage, right? So in other words, people are renting out their extra unused storage space to people who are storing their files on their hardware. And the reason that you need cryptocurrency for that is it allows us to basically write a computer program that says, okay, go and check whether my files are still being stored on this other person's hardware. Are they still being stored there? Yes, great. Automatically transfer so much, so and so much cryptocurrency, right? And so being able to program your money really enables you to do file storage in a way that's verifiable, where you know that your files are being stored over time. It also allows you to have a collateral system where basically in order to store someone's files, you put up a certain amount of cryptocurrency. If you stop storing their files, you lose that collateral automatically. So being able to program your money lets you do this thing that otherwise would require a central intermediary to be doing that. And this might sound like a little bit of a niche use case, but for us it's really important because we see it as the foundational element of the sort of the next generation of the web. And the reason for that is today, if you're on the internet and you go to a website, almost always it's actually being stored by only one of three companies: Microsoft, Amazon, or Google. So the actual files being stored on a server by one of those three companies. And we've definitely seen outages happen where suddenly like massive swaths of the internet are down, and you realize, oh wow, this is actually not maybe the most robust way that we could be storing files. And it also means that we really have no choice but to live our entire lives through that handful of corporations and trust them with our data, and just trust that they'll keep it safe from hackers, that they'll keep it safe from intrusive government requests, right? That we really are relying on just those corporations. And so we really foresee a version of the web where you really are in control of your own data, and you're in control of your own privacy and security, and we think that that is a much better version of the web, and that's why for Filecoin it's really about a lot more than just some financial use case, right? It's not about a stablecoin, it's not about finance, it's about the next generation of the web.
Mm-hmm. I mean, Andy, based on that, I mean, you're also doing accounting for Web3 companies. So, I mean, if you have programmable money but not pegged to anything, is that not a real challenge then from the accounting side?
The accounting is harder than I've ever seen in my entire life. And that's from someone who literally, like, I did derivatives for, 15 years, the most complex derivatives on the planet. It's really hard to get right. So we beg our regulators, please be kind with us because we're trying really hard. But we need stables. We definitely need stables because I consider it like the money market fund in banking. If you have highly volatile assets, the problem is not that if you're crypto native, it's not that your own token is volatile and that's the problem. It's when you have to go into fiat. That's the problem. When you have to translate it relative to something else. So if you have payroll that you have to do in fiat, or if you have a supply chain where you have to make sure that you pay in something besides your own coin, that's when you need to stabilize your own funding. So for our organizations that we work with, we have a run rate that we calculate to get them out of their own token to make sure we have 6 months of fiat to pay their employees or pay their vendors, just in case of the volatility on their own stables. At least 6 months, please.
Maybe, Pat, coming back to you, what I would be interested in, I mean, you also have XRP in your ecosystem, and you also now have your stablecoin. How do they fit together? So is one more like on the retail side and the other is more on the infrastructure side in the background, or what are the reasons behind that?
Yeah, actually, they're complementary. Believe it or not, they're both used within our enterprise product set. And you think about the most efficient digital asset we think out there is XRP on the XRP ledger. It's mills of a mill in order to do each transaction. and it's 3 seconds. The chain has been going for 12 years. It's never gone down. 4 million blocks. So it's it's battle tested. It's industrial strength. That said, there's a couple of issues in today's ecosystem. Some financial institutions can't hold digital assets, and if they were to hold the digital assets, there can be capital requirements that make it punitive, and it's volatile. So what we have is the ability to leverage both XRP within our solution and stablecoins. We've used stablecoins as our solution long before we launched our own. In fact, that's one of the reasons why we did it, because our clients were saying, "Why don't you guys have this stablecoin?" And then we have other use cases we'd like to use it for, kind of like you were saying there, Andy. So they're very complementary in terms of how the real-time exchange works, and then the ability to kind of, once you're on chain, get into an asset that's stable while you stay on and remain on chain.
Thanks. Marta, was it ever an option for you with Filecoin to also have a stablecoin introduced into your ecosystem?
Yeah, so actually there are stablecoins that are sort of in the broader Filecoin ecosystem. So we have, of course, Filecoin, but there's literally dozens and dozens of applications and teams and projects that are building on top of Filecoin in a variety of different ways, some of which include stablecoins as well. So there's actually just a really wide variety of different applications in our ecosystem that go, take this sort of foundation of storage and go even beyond that.
Mm-hmm. Okay. What I'm interested in is, so basically, when you with Filecoin, so when you would have a stablecoin on your system, would you rather prefer to go for a private one, so for example like Ripple has or USDT, or would you prefer to have a central bank issued stablecoin?
Yeah, so in the great thing about cryptocurrency, and also in some ways the frustrating thing about cryptocurrency, is that because we're not some sort of we're not Intel or some sort of large centralized institution, we have very little control of what happens in our ecosystem, right? So it's an open source technology, it's out there in the world, and anyone is welcome to build on top of it, and there's nothing we can do, really to stop them. So, but at the same time, what's so great about that is there are so many applications that we never would have even thought of that, of this technology that just get built by, either some individual who have literally thousands of developers who are building on the network, or by project teams and larger almost institutions that are building. So all of the above are welcome in our ecosystem.
Mm-hmm. And maybe an add-on question to you. So now moving a bit more like into the utility also of other systems. So how do you see the adoption of online storage in Web3 with companies and also larger institutions like even authorities?
Yeah, I think we're just getting to the point where we're really starting to see adoption take off of Filecoin in particular, and we've seen a lot of different sort of industries that we are really excited about using our technology, which range from things like governments. We recently had the government of Aruba via a project called Democracy's Library using the technology, which is super exciting. We also have a lot of really amazing scientific data sets on the network, so various Large Hadron Collider data from different universities, and also from the Atlas project at CERN and other scientific institutions. So there's been all sorts of really amazing adoption, including also in the nonprofit sector. We have genocide survivor testimony on the Filecoin network, which is important both because you can make sure that that data is, replicated all over the world so it never goes down, but also you can make sure that it's verifiable so you can actually tell that no one has tampered with it. And what's very cool about that is, as a result, we have data that's stored on the Filecoin network that's actually been submitted to the International Criminal Court as one example of verifiably showing evidence of war crimes in Ukraine. So lots of really amazing use cases, and it's been really amazing to see how the network has been utilized.
Nice. I mean, Andy, what are your thoughts on utility of crypto in general? So, I mean, we have a use case which is storage of data. We have a strong financial system use case. What else do you see?
Gosh, one of the great things about running an accounting group in the space is that we spread our wings as far as possible. So we have lots of amazing different groups doing cool stuff. Tokenization of real world assets. So we have a mine in Colorado that is, you can buy into the mine itself. So you're actually buying gold that they're digging, which takes about 15 years to pull out of the ground. You need a periodic chart to figure out what this client is doing. There are non-for-profit groups that are fundraising by issuing their own token. So a cancer organization, a leading cancer organization, if you want to become part of the entity, be part of the organization driving it and going where you feel is important to you, you can buy into this token, and then that value of the token can go up. So it's not only just philanthropic, it's also an investment. I think that's an amazing way of raising funds. Some privacy tokens. So we have a group in Nigeria that has a privacy token that's specific to payroll. So some folks were getting assaulted after their payroll would come through. They'd get a big bonus. But now they're using this privacy token, and people no longer know how much money is transferred to them through this privacy token. There's so many real world ways of using crypto. It's amazing. And really what we just need is some good regulation across the globe to make sure that this stays in place and we utilize it and can be honest about it and get rid of the bad guys so that we can all continue to build beautiful things.
I mean, Pat, Andy just mentioned privacy, and recently I had a conversation with someone from the Swiss National Bank, and he said they tried to do a retail central bank cryptocurrency, but they said that there were too many concerns about the people, that they don't want to be tracked by the state. So they figured out that privacy is a very important issue. How you solve it with your stablecoin and your system?
Yeah, it's definitely a balance, and I think that's where, you know, the way that we approach kind of any of the use cases is you have to work from within. You mentioned disruption earlier. Like, we actually think about it more as construction, because there's been hundreds of years of where privacy regulations compliance has come through, and if you know, I think the United States has said they are not doing that. The new incoming Treasury Secretary is like, it won't happen. It's because there's big brother trust issues there. Others may. But if you use a CBDC, there's still you still have to have the wholesale retail banking system that allows you to mint them, but then the central bank still needs to distribute those. And how does that work? And it's probably still going through commercial banks. And so point being is, I think the trust bridge right now is through banks. You still have to know the KYC, AML, and central banks tend to deputize banks in order to then go figure those things out. I think as it evolves, CBDCs evolves, you know, stablecoins evolve, and even tokenized deposits, to the extent that happens, will continue to, you know, kind of evolve, just like good old cash did back in the day.
And Marta, I mean, your project is basically focusing also on privacy, because you're not storing your data somewhere centralized, and also it's like not visible for the storage provider. What are your thoughts on that? So how important is also that the payment angle of the whole system has sufficient privacy?
Yeah, you know, for us, I think what's really important is putting users in control of their own data, and making it so that they don't have to trust Google or Amazon or Microsoft with all of their data. And you know, for us, it's important for there to be optionality, for us to be able to publish data publicly, or also to publish it in a way that's encrypted. And you know, I think when it comes to things like central bank digital currencies, just as a totally separate system, I do understand, and I think agree with the concerns that people have about having a central government that is building building a system that can really track all of the transactions that are happening and also control those transactions, so also be able to like revoke money, right, as a government. I do think that that is in many ways, like one of the things that's interesting about central bank digital currencies is it's kind of the exact opposite of the reason that cryptocurrency was created in the first place. So I definitely am skeptical of central bank digital currencies and much more interested in non-government entities building in this space.
That's a very nice statement, I like. So we are slightly running out of time. What I would like to know from each of you is basically, so what is needed for the next step? So we see that there is adoption is coming. I mean, we have also seen different use cases coming from completely different direction, but what is actually needed? I mean, let's start with Andy.
Well, the low-hanging fruit is, of course, regulation, right? We need global regulation that allows, I concur with Marta completely, we have to allow people to hold their own data, be in control of their own data. That is the number one thing, but we want to get rid of these bad players. We need to know what the rules are, and it can't change every 10 minutes. That's extraordinarily important as institutions that are trying to operate in the space, that are trying to make the world a better place. If we don't know what the rules are, we're going to slow down. It was interesting, Q4 of last year, nothing happened in the United States because everybody was waiting to see who won the election. It's because the laws were going to be this way or this way. Should we stay in the United States or should we move? Are stables going to be okay or are they not? Are we going to get rid of DeFi or are we not? So having basic regulation is the most important thing for our space.
I'll do a +1 to that. I would add, I think innovation has proven to always be relentless, like products and services and kind of competition, and it's really good for the end user. So I think what's needed is the end user just probably doesn't even need to know that they're using it. It's just solving problems. The utility's coming. There's the technology's there. There's really, really talented people in the space. So I think as soon as, it's starting to happen now where some of the needs we've talked about are being met. So super optimistic.
So it's a matter of time, in your opinion. Okay. Marta?
Yeah, I would add, I think in the US over the last 4 years, what we've seen is a lot of innovation leaving the United States and going elsewhere because of the not just lack of regulatory clarity, but the use of the lack of regulatory clarity by regulators to effectively try to ban the entire space from the US, which was in large part successful and led to a lot of the innovation going overseas. So I think we're about to see a lot more clarity of regulations in the US, which hopefully will bring some of that back. But regardless, I think the innovation is going to happen. It's just a matter of where.
Yeah, so time is up, so it was a very interesting discussion, so thank you very much for joining the panel. Thanks GBBC for hosting us. Thank you very much. Thank you very much.